Good morning, dear students. Today we are going to study the next topic, that is the functions of commercial banks. In the previous class we have studied about the different types of banks, and we saw that there are mainly four types of banks are there, and the first one is commercial banks, then there is cooperative banks are there, specialized banks are there, and central bank is there. Okay, so the remaining banks we are not going to study in detail, but we are going to study about the commercial banks. And now we are going to discuss what are the functions or what are the duties of the commercial banks. Okay, banks perform a variety of functions. Some of them are the basic or primary functions of a bank, while others are agency or general utility services in nature. The important functions are briefly discussed below. So the banks are having lot amount of functions, lot amount of duties are there for the banks, and the functions of the bank can be again classified into two categories, that is called as the primary functions or the main functions of the bank. So the main function of the bank is to collect money from the people, accepting money, and giving loans, and making like profit out of that. So that is the main function of the commercial banks, and there are also some other like agency functions are there. Okay, so we will discuss about the different types of functions of the commercial banks. The first function of a commercial bank is called as the acceptance of deposits. Acceptance of deposits. And deposits are the basics of the loan operations, since banks are both borrowers and lenders of money. As borrowers, they pay interest, and as lenders, they grant loans and get interest. These deposits are generally taken through current account, saving account, and fixed deposits. So the main function of the bank is to accept deposits. So the banks are receiving deposits. So the function of a bank or work of the bank is that they collect money from different people, accepting deposits and giving loans. Okay, so that is the main work of the banks. So they collect money, they receive money from different people. Okay, so they collect money from the business institutions, they collect money from the private human beings or private individuals, and they collect even get money even from the government or the central bank, and they get this money and they distribute this money to different people. Again, they hand over this money to other financial or business institutions, as well as to the human individuals. Okay, so they according to the needs, people can take money from the bank, and they will have to pay an interest. So when we are depositing money into the bank, we get a interest, and when we take loan, we have to pay interest to the bank. So the bank is collecting money and from the public and giving them interest, and they give this money to somebody else. So like they take money from one person and give them interest, and give this money to another person and get more interest, and that additional interest that they are getting is the benefit of it. And there are three types of deposits are there, three ways are there that they are accepting. Three types of deposits are accepted. First one is called as the current account. The current account is called as the current account is collected or taken by the business institutions. So the business, those who are running business, they can take a current account. So the current account, the feature of current account is that they can take any amount of money from the bank. Okay, and up to the amount of their balance. So you can deposit. If I am having a current account, anybody cannot have the current account. If I am having any business institution, in the name of the business institution only, we can take a current account. So a business, though this current account is mainly for business purposes. Okay, so if anybody is having a shop or any businesses, and in the name of that we can start a current account, and the money can be deposited. Any amount of money can be deposited, any amount of money can be withdrawn. So that is the speciality of the current account. Any amount of money in the sense that how much balance is there in our account. Okay, so and this money can be withdrawn at any time, and also cash deposits and other type of deposits, number of deposits, any number of deposits can be made. In the same day itself, they can make 10 or 20, any number of deposits can be taken, and withdrawal also, any number of withdrawals are possible, or checks and all are there, many number of checks can be deposited. But the normal accounts, like we are having accounts, and in that there are so many limitations. So we will study about it. So the current account deposits can be withdrawn to the extent of the balance at any time without any prior notice. So if the bank is having, if we are having any amount of money, how much money that we are having in our account, full money also, like it is a zero balance account. The current account is always a zero balance account. It is not necessary to maintain any minimum balance and so on. So you can deposit, like if you are having 5 lakh rupees in the current account, all 5 lakh rupees in one day itself you can withdraw. There is no any limitation for that. And that you can also withdraw like 1 lakh each for 5 times. Any number of times also we can withdraw money. There is no any kind of limitation. Or even if there are a huge amount of money, even more than that money is there, without any kind of prior notice, there is no need of giving any notice or anything like that for withdrawing this money. So that is the more flexibility is there for this account, but the bank is not providing any interest to this one. Zero interest account it is. Okay, so you deposit the money, and anytime you can deposit money, anytime you can withdraw money, but the bank just holding this money. So it is just like you are going and giving to somebody for holding this money, and after some time you take back. That's all. Okay, so the bank is just holding the money of the customers, and when they are need, they will be giving back. That is the only work of the bank when in the current account is done. So they don't give any kind of interest. 0% interest is there for the current accounts. But whereas the savings accounts are for encouraging savings by individuals, banks pay rate of interest as decided by RBI on these deposits. Withdrawal from these accounts has some restrictions in relation to the amount as well as the number of times in a given period. So the savings account means that the normal account that we are having is called as the savings account. So savings account means that it is in order to encourage the saving habits of the people, individuals. So like different people are there, they are having income. So out of there, if there are, like if a family is having 20,000 income, and all 20,000 they need not to spend in a month. So in 1 month they are having 20,000 income, and the full 20,000 they may not be spending, or 50,000 income is there, all 50,000 they are not going to spend. So that if that they are spending only 30,000 rupees, and the remaining 20,000 rupees is there. So that 20,000 rupees we can deposit in the bank, or we can keep it in the bank, or like monthly salary was we are getting. So the salary will be coming to the account, and it will be kept in the account. So when we are in need, so like all 50,000 salary is coming, then all this 50,000 one day itself we need not to take it and hold it with us. So that money will be safe in the bank. When we are in need of money, we can take it, like some 5,000 required, or 10,000 required, or 15,000 required, that we can go and take it, and we can spend that money, and when that money is over, again we can take the money. So remaining money will be safe in the bank. And if we are in a month, if we are spending only 30,000, then remaining 20,000 will be safe in the bank. So such a way, the habit of the individual savings can be increased with the help of the savings account. So that is the main purpose of the savings account. And time and again RBI gives guidelines for how much amount of interest has to be paid for the this one. Normally 3.5 to 4% of interest is there, 3.5 or 4%. Earlier the 4% interest was there, now the interest percentage has been reduced, and mostly the banks are providing 3 or 3.5% of interest for the money that we are depositing in the bank. Before demonetization, there was 4% interest was there. Now the interest rate have been come down. Okay, if a bank is having in trouble, or they are not having funds for proper, so the interest rates have been reduced. Okay. And there is no any limitation. There is a limitation for the, like you cannot make any number of deposits or any number of withdrawal. So if you and there is only up to a limited amount of money we can withdraw. There is, like, even if it is our own money, we cannot simply take money at any time. Okay, there are some restrictions. Number of transactions are restricted, as well as the amount to be withdrawn, that is also restricted. If you want, see, like if you are having 5 crore rupees in your bank, and one day you go and say that I want to withdraw the all 5 crore rupees, suddenly it is not possible. Okay, so we have to give some prior notice. Before itself, we have to inform the bank that we want to have this. We can withdraw this money, but we need to take some permissions and so on for withdrawing this money. Okay, so there are some restrictions. Okay, so like if you are using a ATM card, you know that see, like different cards are having different validities there. Like some are having 30,000 or 50,000. Like that, different type of cards are there, and according to the capacity of the cards and according to the type of the banks that you hold, according to that type of the bank account that you are having, based on that different types of accounts means you can withdraw only a limited amount of money. Okay, it is not possible that you can withdraw any number of times. Okay, and normally the bank is providing 5 transactions free. Okay, and if you make more than 5 transactions, then they are charging some money. Mostly from other banks, other bank ATMs. Okay, and they are charging some money for ATM maintenance charge and all is there. And if you are withdrawing money more than 5 times, not only withdrawing money, if you are using the ATM cards in different areas for more than 5 times, then in a month, that doesn't mean that like if this month is October or in this full month, not like that. So if when you start the first transaction, from there it will be counting. See, for example, if you make a transaction on October 20, and from that day onwards they will be counting. And in this month you made 2 transactions, and next month before like if you are starting on 20th of October, before 20th of November, if you make 5 transactions, that also will be counted. Okay, so such a way they will be calculating. See, like if you are making the first transaction on October 20 and you made another transaction on 25th. So you made 2 transactions in this month. And you may consider that next month you can make more transactions. So if you make 4 transactions in November before 20th, the 5th, another one, like the 3 transactions already you are making, 4th transaction when you are making, that transaction will be cut because already you had used 2 transactions before. So such a way they will be calculating. Those things you can like in the bank website and all, you can understand more details about this one. Okay, so that is the savings account. Next one is called as the fixed accounts, are a time deposit with higher rate of interest as compared to the savings account. A premature withdrawal is permissible with a percentage of interest being forfeited. So see, like this fixed deposits, another type of deposits are there. Fixed deposits, FDs are there, RDs are there, or this type of fixed deposits are. So in FDs, fixed deposits are also 2 types are there, like FDs are there as well as RDs. Okay. Recurring deposit, one more type of deposit is there. So fixed deposit means that you deposit, like you are having some 5 lakh rupees and you are depositing this money in the bank, and you don't need this money for some 1 year. So what you do is that you make this money as a fixed deposit for 1 year. So you get a higher rate of interest. Like if you are depositing this 5 lakh rupees into your normal saving account, you get a 3.5% interest. But if you invest this money into the bank as a fixed deposits, you can get around 7 to 7.5%. Earlier 8% interest was there. Now also the rate of interest has been reduced. Now 7 to 7.5, and if you are older citizen, senior citizen and all, then they may give 7.75 or even up to 8% of interest is provided. So according to the different banks and the different this one, so the rate of interest will be varying. So they will be providing up to 7 to 7.5% interest. Normally the bank is providing for the FDs. Okay, but there is a restriction that, see, like if you deposit this money for 1 year, then you can withdraw this money only after 1 year. If you want to withdraw this money before the period of the completion of the period, then you have to pay some fine, or some money will be deducted, like the interest that you are paying, you are getting from that interest, they will charge some money for the premature cancellation. Okay, so if you want to make a deposit for 1 year, if you keep this money up to 1 year, then only you will get the full amount of interest. Otherwise, means like if you are depositing 5 lakh rupees, you get the 5 lakh rupees, but see, like if you are supposed to get 7% interest for that, so that much percentage of interest you may not get. Okay, so you may get only 5% or 4% interest, for 5 or 6% according to the banks, and according to the time, how much time you have deposited money. Based on that, they will calculate the amount and give you the money back. So that is the different types of deposits. Okay, then one more function of a bank is there, that is called as a lending of funds. Second major activity of commercial banks is to provide loans and advances out of the money received through deposits. These advances can be made in the form of overdraft, cash credits, discounting trade bills, term loans, consumer credits, and other miscellaneous advances. The funds lent out by the banks contribute a great deal to trade industry, transport, and other business activities. So there can be, see, like the money that we are depositing into the bank, or we can take money from as a credits. We can take loans, okay, or we can take some advances. Like you don't have money in your bank account, then also you can give a credit note. Okay, so the credit note can be given, and within 45 days or some 30 days time, you have to deposit this money. So the bank will provide this money to the customer, and you have to pay this money to the bank within the period given. Okay, so such a way there are so many types of, there are so many credits facilities are there, advances are there, like overdraft, cash credits, discounting trade bills, term loans, and consumer credits. So all these things we will be studying in detail. What are these things? Or you are in accountancy, you are studying these things, how these transactions are made. All these things you are studying. So this one, there are so many ways in which the money can be given in as advance. Like before, we don't have money in your bank, then also the bank will provide you money, or the bank can also provide you loans. Okay, so the loans facility also, like you don't have money in your bank, you can take like 5 lakh rupees as a loan. Or if you want to purchase a car, and car is of 10 lakh rupees, and you don't have money, you have only 3 lakh rupees or 5 lakh rupees. So you pay 5 lakh rupees, and 5 lakh rupees you can take as a loan, and you can pay the money afterwards. So such type of facilities are provided. If you want to make a house, you need 30 lakh rupees, but you are having only 10 lakh rupees, and some 20 lakh rupees you can take loan. So home loan is possible, personal loan is possible, different loans are available, provided that there are some conditions for these things, and you have to pay interest to the bank also. When you are paying back the money, you have to pay some additional money as the interest for giving you this loan. Okay, or also credit cards are there. So the debit cards which you are having, which your ATM cards are there, as well as the credit cards are there. So the credit card means that you can withdraw money, you can use the swiping, even when you are not having money in your account. So debit cards you can withdraw only up to the amount that you are having in your bank account, and credit cards you can withdraw up to a limited amount. Like if you are having a credit card of 1 lakh rupees, even if your bank account is zero, you can make a transaction of 1 lakh rupees. There is no any problem. But within 45 days, you have to pay back this money to the bank. Otherwise, they will charge you some interest. So for 45 days, the transactions will be free. So you can make it within 45 days. There is no issue. But if it goes more than that, then you will have to pay some additional money for that. Okay. So these are the two functions. There are a few more functions that we will study in the next class. Okay. Thank you so much.